Welcome, everyone. This is David Morgan with themorganreport.com, and I have a first-time guest, although I've been on his channel a couple of times. Once, I think, one-on-one, and once with nobody, what is it? I forget. Nobody special, I think it is, Jack. And Jack's just a wonderful guy. Just to digress a moment, I met him at the Silver Summit or Silver Symposium a few years back, and we really hit it off. We have that. He's a mechanical engineer by training, and I'm an aero engineer by training. And we just had that instant connection, and we're both very concerned with the financial system. But back to Mario. I think you go by Manico1964 on Twitter. I know you have a YouTube channel. Why don't you go ahead and introduce yourself to all my viewers? It's the first time you're here. I'm sure most of them are well aware of you because we're on sort of parallel paths. You are in the UK, and you've been around the world a couple times. So let me hand it over to you and give yourself a introduction, please.
Yeah, my name's Mario Ineco. I run the Maneco64 YouTube channel. Maneco is like a nickname I've always had from my dad, so I thought I'd use that. And I've been doing my videos since late 2015. My background is as a futures and options broker for government bonds in the city of London. I did trade a little bit of gold and silver, but I got involved in gold and silver privately for myself in 2002. And yeah, I thought I'd talk about what's going on in the markets with through my channel, and also try to wake people up to the nature of our fiat currency system.
What woke you up? What was that turning point after working in the government bond market and perhaps believing it? I won't presume that, but you know, there's that turning point. I had it very early on. Not that that matters, but you know, there's a lot of people that were on the Keynesian side actually taught it. I know a professor that taught it for years, and he gave up his tenure because he said, "I just cannot teach this bullshit anymore. It's just disingenuous, and I can't live with myself." And he stopped. And I really admire people like that. What brought you to the precious metals, or really what I call the honest money camp?
Well, at university, I did economics with international relations, and most of the economics was Keynesian. But I had one course that I did with a guy in Switzerland. He was a professor, but he was also a banker, like at Bankers Trust, and it was really interesting what he taught. He taught me to look at the data and stuff, and the economy, you know, statistics. But you know, I started in the early 90s working in finance. I never really questioned things like what is money and stuff. You just took it for granted. What woke me up though was, you know, the more taxes I started paying as my career progressed, like in the late 90s, I started looking into free markets, and I found Lou Rockwell. I found the Mises Institute. I read Ayn Rand. So that got me into, you know, the Austrian school, libertarianism, sound money. And then in 2002, after the dot-com bubble burst, my private pension dropped quite a bit in value. And I thought that I'd, you know, my wife and I, for some reason, decided to buy some gold coins, some Krugerrands. And when you hold a gold coin for the first time, it's really amazing, you know, the weight. I'd never held a gold coin. The only gold I ever held was my, you know, white gold wedding ring. Yeah, so once you hold gold, you want to know more about it. And that got me down the rabbit hole. You know, I always love history, and I looked into it. And then a year later, I bought silver, and that's how I got into it. But prior to that, yeah, I was just doing business and didn't really think of the system. I stayed in the business until 2012. But, you know, in 2008, I thought everything was going to collapse, and I was prepared for it because I'd been stacking already. But I remember sitting looking at the price of Goldman Sachs and JP Morgan shares going down the tank, you know, going down to the floor, and all of a sudden, you know, they announced all the bailouts and all the, you know, that TARP which actually the first time it didn't go through. And then I think Paulson, I think he begged on his knees to Nancy Pelosi, and they finally got it through. They warned people that there would be, a martial law.
Yeah.
So, so that's how I got into it. And when I bought gold as well, I started following the gold price, and I saw right away that there was something funny going on there too, and the silver price.
Right. Well, thank you for that. I'm glad we got to know each other a little better. That's a segue to the first question. And the first question I have is, can the power elite, what I call the money masters, lose control? And before I hand it over to you, I just want to point out that in 2008, and still referred to in the mainstream financial press as a crisis, we, the global empire of finance, got a lot closer to seizing up than most people believe. Because the situation was that the banks started trusting each other. And the whole system is based on confidence, and I call it a con game because that's what a confidence game is. It's a con game. So you've been conned. You've gained somebody's confidence either on an individual basis, international basis, a corporate basis, or whatever, but it's con. So the problem was the banks stopped trusting each other. They were basically, the system was what Jim Rickards refers to as Ice 9, the metaphorical freezing of an element and everything stops. That started to happen. But what took place was the Fed, I'll give them credit, even though I'm not fond of them, stepped in immediately. Had they waited and pondered it and had a committee meeting and had a board of governors meet and all that, it might have be a different story. But what happened was what I call dog doo-doo. These securitized loans that were worth nothing, were worth far less than their face value, that would stop the system. So banks were not trading amongst each other on any securitized debt having to do with any mortgages, even ones that probably were really, double or triple A. So what happened was the Fed intervened and said, give us your dog doo-doo and we'll give you face value. And we'll give you T-bills, which is the most trusted securitized debt obligation known to mankind present. So if I'm going to off something that's worth, 50 cents on the dollar and no bank will accept it or use it for collateral, I'm in big trouble. But if, Big Daddy comes along and says, oh, I'll pay you for that. In fact, I'll pay you full face value. You keep the system going. And that's what happened. So most people don't know those details. But if you actually do enough research, you'll find that even Geithner and some of the others at the top of the pyramid, the little ones we see, not the real ones that we don't see, were scared to death that this was, 3 days from the end. So you don't have to, you can agree with that or not, you can add on to that. But my point is, are we in a position, and this is what very few people talk about, that's why I wanted you on here, because you've done a great deal of study and look at history a lot, and you back up a lot of what you say from the past, which I think is an excellent way to look forward. Do you think that the system could get out of control of the elitist bankers?
Yeah, I would add on to what you said there about 08. A lot of people have said, and I agree with them, that it wasn't like it was just Wall Street and the City of London and other financial centers that were close to collapse, but the economy itself wasn't in bad shape. And you mentioned there the fact that banks wouldn't deal with each other. That was the LIBOR crisis, and that's why LIBOR rates went to double digits. Like banks wouldn't trade with each other. And at the time, I think even the Bank of England intervened to tell the bankers to make up the LIBOR rate, because they do, like with gold, the LIBOR fixing. So the Fed had to throw everything at it, and they did it quickly. I'm not a fan of central banking either. So and the fiat currency system, especially where we're now, there's so much debt and credit that it's based on confidence, like you said. There's full faith and credit in the system, and I think it could happen again. And because they've used already so much ammunition since '08 that, you could try it again. It might not work. It's like, I would say, someone who's addicted to drugs. There comes a point where the more you take, you get closer to just dying because it won't have any effect. And I think that's where we could be. That's where we could be going, because nothing, lasts forever, especially a Ponzi scheme.
So what would that look like to you, Mario, in your mind? It's, does it seize up? Do the banks close the doors for 3 days? Do the ATMs start working? Do they, do their usual come out with some talking head and tell us everything's great and the economy's never been stronger and only take us a couple days? I know no one knows the answer, but you're a deep thinker, and, I value, your thoughts. That's why I want you on here today. But what do you think it would look like? And again, no one knows for sure, but that would be a big deal if it's 2008 they didn't intervene in time. We'd be in a different scenario right now, maybe a better one. I don't know, but regardless, what do you think could it look like?
Well, I'll go back in history and look at 1933. I think the U.S. banking system was in really dire straits, and FDR, he was inaugurated in March. Back then, president was inaugurated in March, and right away he instituted a 1-week bank holiday where people couldn't go to the bank and take their money or their gold out. And then he reopened only the most favorite banks, probably the Wall Street banks mostly, and a lot of people lost their money. So I'm not saying that's going to happen, but it's some kind of halt to the system. They'll have to halt the system, and maybe they'll try some kind of digital currency. They're going to say we're going to have to start a new system because this one has collapsed, the CBDC. And it's questionable whether it would work, because people might start asking, why should we trust you if you let this, the old system collapse? And we spoke about that yesterday when you called me. I mentioned this as well, fiat money inflation in France. What happened in France in the 1790s. They were in a lot of debt after the French, during the Revolution, and they came up with the paper money, and it had backing. It was church land, and they thought, they were skeptical of doing it because they had the experience from the Mississippi bubble and John Law. They really were not enthusiastic about it, the National Assembly in France, but they went ahead and they thought, oh, it's only going to be one issue. That's fine. It will kickstart the economy. Sounds familiar with today. And then they ended up doing so many issues of assignats that it got to a point where it all collapsed, and they tried to bring in the mandats, and it was like everything was ready to launch the mandats. And they were trading like when issued, like when issued means that you trade before something is issued to the market. And when they did, it just collapsed as well. So yeah, it's difficult, David, to say what would happen. We haven't seen the system has been pretty relatively strong for, I would say, in the U.S. since the Civil War. I mean, you had the greenbacks that had some problem, but you have to go all the way back to the continental currency, the shin plaster, they call it. In other countries like Brazil and Argentina, they usually have to start bring in a new currency or lop off some zeros. So I'm not really sure. It's just going to be disruptive. One thing I would say, though, I'm going to be happy to have some gold and silver coins in my hands when that happens.
Yeah, excellent answer. I like the fact that you went back and studied history, because I think that gives us a realistic approach. No one can punch holes in your your argument. You didn't assert that this is the way it's going to go, but looking back, and I agree, I think there'll be some type of pause before the reset. Leo Zagami, I'll give him credit, and it made me laugh, but I agree with him. He said the great reset will be the great reject, that there'll be enough, maybe there'll be a state in the U.S. that says we're not accepting your new CBDC. There's already been assertions that some states will not go along with CBDC. The point is that I've thought about a lot and want your thoughts is, if it fails or they propose a CBDC and it really doesn't go the way they plan, do you think they have a backup plan to tie it to some type of gold or precious metals to gain that to recon the con game? In other words, well, you don't trust us, but you trust gold and we'll move forward. Have you given any thought to that?
Actually, a lot of quite a few U.S. states are looking into that. I actually was on the live stream with Mike yesterday, the Mike and Mario show. We're talking about the fact that last Monday, the Arizona Senate, they passed the committee they voted in the committee to go ahead with a vote to adopt a gold-backed and silver-backed currency and a bullion depository for the state of Arizona. So yeah, and I think Texas has a bullion depository, and the people that I'm affiliated with, Glint. I don't know if you've heard of them. They've got
directly. Yes.
I've heard that they're working with some U.S. states because they want to use the Glint technology. So to basically back state currency with gold and silver and allow people to use that. So I think it might come not from the federal central government in the U.S. It might come from the states. So that's encouraging, I think. And as for CBDCs, yeah, I don't think people are keen on CBDCs in the U.S. They're waking up to it. I noticed as well they're waking up to this ESG, a narrative for climate change. JP Morgan Asset Management dropped out of this Climate 100+ group, and then a few hours later, I think PIMCO announced they would also get out of this group. So yeah, like you said, great reject sounds interesting. And I don't know about the UK. The Bank of England, they've got a timeline for, they call it Britcoin. We'll see if it works. I think if it doesn't work in the US, it might not work anywhere else, because the US is such an important country still economically, and people usually follow the US.
I got a similar thought that'll be states' rights, and the states may, break away, so to speak, and say, no, enough of your foolishness. I'm remiss. I need to get one of the sound money advocates. It's been a personal friend for probably 20 years, and interview him. It's been something on my mind, but back to you, not me. So I'm going to move on to a different topic. And this is something, again, that, I like to make my podcast different. I mean, a lot of stuff we rehash again and again, and fundamentals are always good to know. But we talked yesterday before this interview about the VAT in Europe and the UK. And this, to me, is something, I think it could be deliberate. I'll put on my tinfoil hat. But the VAT is pervasive throughout most of Europe, and that means a value-added tax. So if you're going to purchase precious metals and you don't have a VAT on gold, but you do on silver, that definitely persuades most people that are going to buy a precious metal to favor gold because they're not paying an extra to obtain it. Can you walk us through what happened in the UK on the gold side of the VAT and where we are today and what your thoughts are?
Yeah, I always thought it was strange that we have VAT on silver, which is like a sales tax. I guess you guys have sales tax too, but here some states here it's 20% the VAT. And I asked Oliver Temple from Gold Investments, who I am affiliated with here in the UK, and why gold doesn't have VAT and silver does. And he said, well, up until 1999, gold had VAT, but what some bullion dealers were doing, they were buying the gold from Belgium, where there was no VAT, and at the same time claiming back the VAT from the taxman. So they're getting paid extra money by the taxman, and the taxman was losing money because of that. They twigged onto it. So the story is that they just abolished the VAT on gold because it was costing the treasury and the taxmen too much. And the reason they didn't do it for silver, it was because it was not worth it for dealers to do that with silver, because the value of silver is so much lower than gold, so it was not economical. But like you though, I think it's more than that. I think it's because silver is you only have to go back in the US to 1964. Here in the UK, I guess you have to go back a bit further to 1946. People, we had like 50% silver coinage. US had 90% silver coinage till 64. Yeah, silver is still associated with money, and they don't want the general public to protect themselves. So it puts people off. That's right. It hasn't put me off from buying silver, though. Because I think when things break, the VAT that you pay on silver will be insignificant. I'll give you an example. When I first bought silver in 2003, I think it was around £3.60 an ounce. So I paid almost £4 with the VAT, and I wasn't very happy. But now silver is like £18. It's been as high as £30 in the past. So what I'm trying to say, yeah, it's not good that there's VAT, but if silver does what we think it should do, it shouldn't discourage you either. But I think there is a little bit of a conspiracy there. The powers that be don't want people to really get into silver. You can buy silver here and not pay VAT, but only if you buy allocated silver and you just basically trade it. And if you don't take delivery of it, then you don't pay the VAT, but that means you'll never really be holding it. So they allow people to trade without VAT, for the price gain. But if you say, oh, I want to take delivery of the allocated silver, you're going to have to pay the VAT.
You were on a recent interview that I listened to. I do not catch all your stuff. I just don't have time to listen to everybody in our camp. But the question that was given to you was along the lines of, well, you have to carry these huge silver bars in to make transactions, and you corrected the interview saying, no, that's not true. When silver circulated as money, you had coins in your pocket, and you could, buy your groceries with some silver coins, and this is true. And it leads to the mismatch of silver to gold, not only the gold-silver ratio, but the value of each relative to each other, because you have to go back to maybe 1900, and of course, coins circulated through 64 that were 90% silver here in the States. But the point is that silver is so misvalued right now that you might need to take, a couple of kilos in to get groceries. But in times gone by, just coins in your pocket would buy the same amount. So it's really mispriced. Silver, when it had one function, and gold had one function, and they were both money, there was a ratio of 20 to 1 or less. Most of the time, it was around 12 to 1 or less. So can you kind of walk us through that answer that you gave on another interview about, setting the record straight? Not today. We're not talking about what it would cost in, silver ounces today, but in times gone by for over 100 years, silver coins in your pocket for the average person took care of business for you.
Definitely. I was reading a book recently, like a historical novel by Ken Follett, and it was about the Napoleonic Wars, during the Napoleonic Wars. And there's one part in the book where Napoleon had been exiled to Elba in 1815, and the British actually took over Brussels. Actually, they were there in Brussels. It was still part of there wasn't a Belgium, and there's loads of aristocrats, hangers-on that came from London. And in the book, they say, oh, they bought a bottle of champagne for 4 shillings. And a shilling is basically similar to a quarter. So you could buy, and I bet the people back then, the aristocrats or the nobility, they were drinking good champagne. So, you could, with 4 of these, you could buy a bottle of champagne. So I thought that was interesting. Yeah, it's just like today. I mean, I know we don't use much copper nickel coins anymore, but it was the same. Yeah, that's what it was. And I think a lot of people didn't even have to bank. They didn't have to have a bank account because silver had value. There was very little inflation in the UK in the 20th century or 19th century, like from 1820 to 1914, the average annual CPI was minus 0.1. So the silver and the gold had a lot of value. And it was really stable, and you could save it, for when you retired, and it would still buy the same goods that it used to buy 20, 40, 60 years before. And yeah, it's just like the coins that we have today, but the only difference is that they were made of silver.
Yeah, well, you've hit the 2 main ideas that we talked about yesterday. So I want to turn it over to you, Mario. What are the top, let's say 2, maybe 3 ideas that are really at the tip of the spear for you? What's bothering you? What do you think are the most pertinent items to think about in the present day, be it geopolitical, monetary, disease-wise, health-wise, education, you name it? I know you're a broad thinker, and I know you continue to study every day like I do. What's really scratching at you right now?
Well, in the last few weeks, it's geopolitics and war. It just feels like the powers that be, especially in the West, really pushing for war. And it's related to the finance, I think, because they know they're in trouble. We've got inflation has never gone away. Interest rates are rising again. The Fed has to pretend it's tough on inflation. And you've got the BTFP program ending on March, I think, 11th. And you've had the problems with the commercial real estate. So yeah, the geopolitics and the banking and the financial system. And I think they're interrelated because it could be a way, if we have more escalation, against Russia, it's an excuse for them to keep the spigots, the deficit spending going. And God forbid, if there is like a major war against Russia and even China, then the Fed will have the excuse to do QE again. During World War II, they did QE and they kept the 10-year yield below 2.5%. So that's what I've been thinking lately in terms of health. Yeah, I mean, I never trusted what they told us in 2020. I guess right in the beginning when they showed all this stuff happen in China, I thought, oh, this is bad. But then I started asking questions because in the papers here, they kept posting how many people were dying each day. It was like a scorecard. And then common sense led me to look at how many people die anyway a day in the world. And it was a huge number compared to what they're telling us. And I thought there's something here. So yeah, the health is really, it's just like the money and finance, David. Can't trust. It's really difficult to trust the health experts, and because of what's happened in the last 4 years. So yeah, and education as well with the children, even though I don't have young children anymore. But I think a lot of people are even thinking of homeschooling, and even here in the UK. But in the UK, they're trying to crack down on that. And I noticed when we had lockdowns that Microsoft was working with the Bank of England, and the Bank of England was working with schools so that kids, when they couldn't go to school because of lockdowns, they would access the Bank of England website for things like money, to learn about money and economics. So yeah, yeah, it's a problem. And like you said, earlier, before we came on, the World Economic Forum, I think they are like the think tank for all this agenda. And but I'm not sure whether people are buying into it. And it could be one of the reasons why, going back to the beginning of what I said, why they're ratcheting up the war drums. They're beating the war drums louder, because they know they're losing control of the economy, the finance, and they're losing support, public support as well. So that's, in a nutshell, what I'm concerned about.
Well, that's a great summary, and thank you for that. I will just make one add-on comment. It's not embarrassing. I mean, the plan with my wife and I was to homeschool our kids, and we only did it for 1 year. But in this state, what was interesting is, even though you were allowed to homeschool and filled out their paperwork, you still had to take your child in, I think it was every 2 weeks, to what I call the indoctrination center. So we had to take them to a local school, and they went in without us being present, and have 1 hour of what I'll call indoctrination. I'd ask her or ask them, what did you learn, and this type of thing. But I just thought it's interesting. And again, I don't know about other states, but I do know from experience in this one, you're allowed to homeschool, but they still get their 2 or 3 cents in, regardless of whatever. And I don't know what exactly. The kids are kind of big. They're pretty small when we did it. But just really enjoyed our conversation. I'm sure we'll do more. Is there anything you'd like to summarize or say before we close out today?
I guess, yes, there's a lot of worries and things that could go wrong in the world, but I think the reason I talk about it is not to scare people, but to make people aware of it, so that they can better understand things. And so, yeah, just try to not let it get you down, and just live your life, to the fullest.
Great words. Great way to summarize it. Thank you so much for your time, Mario. Tell us again what your YouTube and Twitter feeds are, and then we'll go ahead and close out.
Yeah, YouTube is @Maneko64, and Twitter is @Maneko1964.
All right, great. Thank you so much for your time.
Oh, you're welcome. Thank you.